Welcome everyone. In this video, we will analyze if ZBCN coin will rise. Don't forget to subscribe and like the video, and please watch to the end to understand. One of the formations on the chart is the rising trend line, which is clearly visible in the price action. This ascending trend line shows that the price has been moving upwards for some time now, and this level has been working as a strong support area. The price has touched this trend line more than once in the past, and each time it has done so, the price has reacted and continued its upward movement. This suggests that this trend line is recognized by the market as a strong support. In terms of technical analysis, rising trend lines are a positive structure, indicating that buyers are strong in the market and the price is generally moving upwards. In the current situation, it seems quite likely that if the price approaches and touches this trend line again, it will receive a similar reaction. Because this trend line, which has served as support in the market many times before, can stand out as an important level that investors carefully monitor and shape their positions. Such rising trend lines are considered long-term support points in technical analysis, and it is usually the case that every time the price comes here, buyers step in and support the market upwards. The current technical structure suggests that there is a high probability of a strong reaction when the price approaches the trend line again. If the price breaks back above this trend line and stays there, a strong move to the upside is quite possible. In addition, trend lines are also of great importance for investor psychology. An ascending trend line is considered a safe zone in the market, and buyers often move in when the price approaches this level. Especially a trend line that has reacted many times in the past is a very important source of signals for traders. If the price comes back to this trend line and receives an upward reaction from it, it will confirm the continuation of the uptrend. Technically, the strength of a rising trend line is measured by how many times the price touches it and how it reacts to each contact. At the moment, the fact that price has tested this trend line several times suggests that it is working as a solid support level. If the price comes back to this area and gets the support of buyers here, it is highly likely that an upward movement will start and the trend will continue. The price should not break this uptrend. If it does, the price will go negative and we will enter a downtrend. In terms of Elliott waves, we are currently seeing the same structure as in the previous video. This is quite typical as part of technical analysis in the sense that the waves repeat each other from time to time and move in a certain pattern. As I mentioned earlier, the second bottom is currently going sideways for a long period of time, as we would expect. Such movements can be interpreted as a process of the market calming down and reaching a certain equilibrium. So at the moment, the price action is not showing any major action, but it can always be a harbinger of a stronger third wave. This prolonged sideways movement could be a necessary phase for the market to mature further and for buyers to step in more strongly. It is very important for traders to wait patiently in this process. This is because the theory of Elliott waves predicts that the third wave in particular usually comes strongly and quickly. Therefore, the horizontal movement of the second wave, which is currently ongoing, may actually be a necessary preparation period for the third wave. It is important to patiently wait for this process to complete in order to create a great opportunity. From a technical point of view, the idea that the target should be above the minimum Fibonacci level of 1.618 when the third wave arrives is still valid. In the theory of Elliott waves, the third wave is often considered to be the strongest wave of the market and allows the price to rise in a significant way. If the current sideways movement ends and the third wave begins, one can expect a big momentum boost in the market. After such a strong move, it is quite likely that the price will move towards the target and break through the 1,618 Fibonacci level. This process could present a great opportunity for traders, especially since at the moment the market is still in the sideways movement of the second wave. This could be a harbinger of a potentially strong uptrend. This is because the price is currently going through a period of consolidation to reach the expected levels, and such structures usually trigger a big bullish wave afterwards. So, for traders to patiently wait for the third wave to start could lead to big gains in the long run. The third wave comes out of nowhere and people will be surprised what happens. When we look at the RSI indicator, the most notable thing that we see is the presence of a rising trend line. This trend line guides the movement of the RSI quite effectively. In previous periods, the RSI has touched this rising trend line several times, and each time it did, upward movements were observed in parallel with the price. This suggests that the RSI is using this level as an important support line, and the reactions from here are driving the market's momentum. In technical analysis, these types of patterns, often seen in momentum indicators such as the RSI, provide valuable clues about the future movement of the market. If the RSI touches this rising trend line once again, it's very likely that the price will get another strong reaction from here. This is because in the past, every reaction at this level has given the price momentum and caused the market to move upwards. This kind of structure suggests that the RSI is now recognizing this level as a stronger support, and buyers are becoming more active here. For traders, such levels signal potential buying opportunities, as the RSI retesting this level could be an important trigger for the price to make an upward move. From a technical point of view, the RSI consistently touching the rising trend line indicates that buyers are starting to take control within the market, and the pressure from sellers is diminishing. Such situations are usually signals that the market is starting to move upwards in a healthier way. The fact that the RSI has tested this level several times suggests that this level has now become a strong support point, and any reaction from here will be stronger. Traders can look forward to the RSI approaching this level again, as a reaction from here could give the price some upside momentum. Another important point is that every time the RSI touches this trend line, it rises with the price, indicating that the momentum in the market is solid and sustainable. Every time the RSI touches this level, traders are usually likely to buy and support the price. This ensures that price movements are strongly upward. If the RSI approaches this trend line again and receives a strong reaction from here, this could create a significant opportunity for the price to rise further. The persistence of such technical patterns indicates a healthy continuation of market movements. This rising trend line on the RSI indicator is not only a support point, but also a level that allows traders to trade with psychological confidence. This is because the more a level is tested, the stronger it becomes, and the more the market takes it into account. Remember that RSI and price always move at the same time. When we look at the MACD indicator, we see that a new cross above the zero line has occurred. This crossover means that the MACD crosses the signal line upwards and is generally considered a buy signal. Such crosses above zero are often interpreted as the start of a strong bullish move, as the MACD crossing at this level indicates that buyers are starting to take a stronger hold on the market. This crossover signals that momentum is building, and the market may gain upward momentum, especially due to the alignment between the MACD's moving averages and the price. If this intersection allows the MACD to move further upwards, that is, the MACD line moves the signal line upwards, this could trigger a strong rise in price. Such a continuation of the MACD would signal an increase in buyer pressure and a decrease in selling pressure. This means that the price will gain upward momentum. For traders, this kind of signal is usually considered a strong buying opportunity and indicates that the market momentum will increase rapidly. Therefore, such movements of the MACD are often considered as confirmation of the uptrend. The fact that the MACD indicator remains above the zero line and shows an upward movement suggests that the market is currently gaining positive momentum and buyers are becoming more dominant. This is a very positive signal from a technical point of view, as a MACD crossing into positive territory can often signal a strong bullish move. If the MACD can sustain this bullish move and move higher, the price is expected to move upwards in parallel. Another positive development is that this MACD cross above the zero line is in line with the price action. If the MACD continues to stay at this level and initiates a further upward move, the price can be expected to move upwards as well, signaling the beginning of a positive trend in the long term. There is nothing negative for the MACD right now. Everything is positive. Don't forget to subscribe and like so that I can continue the videos. See you in the next videos.